Let's get into Chapter 5, Learning and Adapting. This chapter is all about embracing growth through reflection and adaptation. Trading isn't just about getting everything right on the first try. It's about learning from your mistakes, reviewing your trades, and constantly improving. Mistakes are part of the process. First things first, you're going to mess up. Everyone does, even the best traders. But the key is not to avoid mistakes, it's to learn from them. In fact, your mistakes are often your greatest teachers. They show you where you need to improve and highlight areas where you might be acting impulsively or not sticking to your plan. Instead of beating yourself up about a bad trade, embrace it as a learning opportunity. Ask yourself, what went wrong here? Was it a technical mistake, like missing a key level? Was it emotional, like fear or greed getting in the way? By analyzing your losses and not just your wins, you start to spot patterns and learn where you need to adapt. The goal isn't perfection, it's progress. The power of a trading journal. A trading journal is like your personal trading therapist. It helps you track your trades, but more importantly, it gives you a space to reflect on your emotions and thoughts during each trade. You don't just want to write down what happened with the numbers, buy, sell, entry, exit. You want to also capture how you were feeling at the time. Were you anxious, confident, rushed? Here's what you can include in your journal. Trade details, date, time, trade type, long or short, entry/exit points, stop-loss levels, and target prices. Emotion log. How were you feeling before, during, and after the trade? Were you calm or panicked? Reasoning. Why did you make this trade? What was your strategy? Did it align with your plan? Results, profit or loss, and any lessons learned. The point of this journal isn't to keep track of every detail for the sake of tracking. It's about understanding your process and identifying patterns in your decision-making. You'll start to see where you tend to make mistakes, or where your emotions interfere, and adjust your strategy accordingly. Performance reviews, taking a step back. Just like you must review your trades, you need to regularly review your performance overall. A performance review is basically a check-in to evaluate your trading journey and see if you're on the right track. This is where the real growth happens. Here's what a performance review can include. Win rate. How often are your trades successful? If your win rate is low, it might be time to tweak your strategy. Risk-reward ratio. Are you risking more than you're making? Even if you win half the time, but you're risking 2x what you're making on each trade, you're losing in the long run. Emotional trends. Look back at your trades and ask yourself, were there patterns where your emotions affected your decisions, like overtrading after a loss or chasing profits after a win? Strategy effectiveness. Is your current strategy still working? If the market has changed, it might be time to tweak your approach. The goal of a performance review isn't to be overly critical, it's about getting better. If you're consistently finding mistakes or emotional traps, that's an indicator of areas to focus on. These reviews give you the chance to pivot and make necessary changes. AI tools. Analyzing data like a pro. Technology has made it easier than ever to learn and adapt. AI-powered trading tools can analyze your performance, give you insights, and even suggest changes. These tools are designed to help you uncover hidden patterns that you might miss by just looking at your trades. For example, AI tools can track overtrading. If you're trading too often or taking on too much risk, AI can flag this behavior so you can adjust. Risk tolerance. AI can compare your trades with your original risk settings and let you know if you're consistently deviating from your plan. Emotion patterns. Some tools are designed to analyze your trading style and provide feedback on how emotions might be influencing your decisions. It can highlight behaviors like panic selling, greed-driven buys, or impulsive trades. These tools can be incredibly helpful for spotting unconscious biases in your trading behavior and helping you stay disciplined. They're a great complement to your performance reviews and trading journal because they provide another layer of objective feedback. Adapting to market changes. Don't get stuck in your ways. The market is constantly changing. What works today might not work tomorrow. If you're always trading the same way, using the same strategy, without considering new market conditions, you're setting yourself up for failure. This is where adaptation comes in. Successful traders are flexible. They're always willing to change their strategy based on what's happening in the market. Maybe the market is more volatile now, so you need to adjust your risk management. Or maybe a new trend is forming that requires a shift in how you're analyzing the charts. Adaptation doesn't mean abandoning your plan or changing everything all the time. It means being aware of how the market is shifting and tweaking your approach to stay in sync. This keeps you relevant in an ever-evolving market. Key takeaway: growth is about reflection, not perfection. Trading isn't about being perfect, it's about being better today than you were yesterday. By regularly reviewing your trades, journaling your experiences, and learning from your mistakes, you can develop a growth mindset that will help you stay on the path to success. The best traders don't avoid failure, they embrace it as part of the learning process. The key is to constantly reflect, adapt, and improve your approach. Key So, how do you currently approach reviewing your trades and learning from them? Do you have a system in place, or are you just starting to think about performance reviews? Let me know what's working for you, and if there's anything you'd like to dive into further. The next chapter is our final stretch.